Hey everybody, welcome to Mortgage Today for Monday, February 12th, 2024. And oh, what a day it was. UMBS were up 19 basis points bright and early on trading today. The week ahead will be dominated by inflation releases, which mean investor forecasts as to what the Federal Reserve is going to do over the near term, and it may jump around quite a bit. We start off with a rather minor player. Today was the New York Fed one-year inflation expectations index, which was 3% in its latest release. Before the CPI indexes are revealed on Tuesday, with the headline number expected to plunge to 2.9% annualized from 3.4% in the last report, when it was expected to come in at 3.2%. PPI and University of Michigan will bring up the rear on Friday. Brace yourself for a bit of volatility. Expectations for a Fed cut at the March meeting have now dropped to below 20%, according to the Fed Fund futures, and there are now just 4.5 cumulative cuts priced in for the year as a whole, down from around 6 at the end of January. There will be 8 Fed tongues wagging this week, with 6 of them voters, so there's even more of a chance for an occasional headline spike in volume this week. This week, we will also see the release of the NAHB Housing Market Index, as well as housing starts and building permits on Thursday and Friday, respectively. Single-family housing starts are expected at 1 million annualized rate over the last 2 releases. Single-family housing starts have exceeded 1 million annualized rate over the last 2 releases, and we need that to continue. Actually need to rise, but just to chip away at some of the severe inventory shortage. The week ahead will be all about the CPI release tomorrow. The street is looking for a 0.2% month-over-month increase in the headline number and a 0.3% month-over-month increase at the core rate. This would translate into a 3% and 3.7% annual increase, respectively. Remember, the Fed wants to see 2%. Asking rents have stabilized, according to research from Redfin. In 2023, asking rents increased 1%, which is much less than the big spike we saw in 2022. Monday was very much a placeholder in the grand scheme of things. The same could be said for most of last week as well. As the Fed and the market wait to refine their sense of the rate trajectory, there are only so many reports capable of setting the tone for the week's end. CPI is one of them, and tomorrow's installment will be a true big-ticket data mover since CPI is one of them, and tomorrow's installment will be the first big-ticket data since the jobs report. It's always tempting to imagine that there's some way to reliably predict a slightly stronger or weaker result, but that same sentiment is shared by many other market participants and professional forecasters. The net effect is a market that's priced to perfection based on forecast consensus. Translation: it's anyone's game on Tuesday morning. We know the reaction could be big. We do not know the direction. So UMBS closed the day up 3 basis points at 100.70. So at 100.70, it puts us right underneath that line right there at 101. So we have some strong ceilings with the 25-day moving average converging on the 50-day moving average, and a very, very strong Fibonacci line at 101.392, which is like a half a point higher than where we're at now. We do have a floor pretty close at 100.614 and 100.427. So hopefully if we get news we don't like, those will hold us into the current ranges, but I think kind of staying in this range is the best we could hope for on tomorrow.